In a move sending shockwaves through the aviation industry, China has halted new orders for Boeing aircraft. China, a rapidly growing market for air travel, has been a crucial customer for Boeing. The decision, announced by Chinese aviation authorities, affects all new deliveries of Boeing jets. Chinese airlines have also been instructed to stop purchasing US-made aircraft parts and components. This move essentially freezes all future growth in Boeing's business with China. The impact was immediate, with Boeing shares tumbling in after-hours trading. The company is still recovering from the fallout of two fatal crashes involving its 737 MAX aircraft. While the MAX has since returned to service in most parts of the world, China was one of the last major markets to recertify the plane. The Chinese order halt adds a new layer of complexity to Boeing's recovery efforts. As the U.S.-China relationship becomes increasingly strained, businesses on both sides are finding themselves caught in the crossfire. To understand the magnitude of China's decision, it's crucial to grasp the sheer scale of the Chinese aviation market. China is projected to overtake the United States as the world's largest aviation market within the next decade. The country's burgeoning middle class and increasing appetite for air travel have fueled an insatiable demand for new aircraft. Boeing has been a major beneficiary of this growth. In recent years, China has accounted for roughly a quarter of Boeing's commercial aircraft deliveries. The company has invested heavily in building relationships with Chinese airlines and establishing a presence in the country. The Chinese market is particularly important for Boeing's wide-body jets, such as the 787 Dreamliner. These aircraft, designed for long-haul flights, are in high demand as Chinese airlines expand their international routes. Beyond the immediate impact on Boeing, the Chinese order halt also raises concerns about the future of the global aviation industry. A sudden shift in demand, particularly from a market as large as China, can have ripple effects throughout the entire ecosystem. The order halt serves as a stark reminder that China is willing to use its economic leverage to pursue its strategic interests. China's decision to halt Boeing orders is a multifaceted issue driven by a confluence of factors. Analysts point to a complex interplay of geopolitics, safety concerns, and China's desire to bolster its domestic aerospace industry. The order halt can be seen as a strategic lever in the ongoing trade dispute between the US and China. The two economic superpowers have been locked in a tit-for-tat tariff war for several years. Second, lingering safety concerns surrounding Boeing aircraft, particularly the 737 MAX, likely played a role in China's decision. Chinese regulators have been meticulous in their review of the MAX, and it's possible that they harbor lingering doubts about the aircraft's safety. Finally, China's decision to halt Boeing orders can also be seen as part of a broader push to promote its domestic aerospace industry. By reducing its reliance on foreign aircraft manufacturers, China can create more space for its domestic champion to grow. Section 4. Economic turbulence. The U.S. impact. The economic fallout from China's decision to halt Boeing orders is likely to be significant, both for Boeing itself and for the broader U.S. economy. The immediate impact is already being felt by Boeing and its vast network of suppliers across the United States. The company has warned that the order halt could lead to production cuts, deferred investments, and potential job losses. Boeing employs over 140,000 people in the U.S., and its supply chain extends to thousands of smaller businesses across all 50 states. Beyond Boeing, the order halt will also exacerbate the U.S. trade deficit. China is one of the largest export markets for American goods, and the aviation sector is a major contributor to U.S. exports. The loss of aircraft sales to China will widen the trade gap, putting further pressure on the U.S. economy. The situation also highlights the risks of economic interdependence. The U.S. and China are deeply intertwined economically, with each country relying on the other for goods, services, and investment. While this interdependence has brought benefits to both sides, it also creates vulnerabilities. The Boeing order halt demonstrates how economic ties can be weaponized in times of geopolitical tension. The situation presents a difficult challenge for the Biden administration. Section 5. U.S.-China relations. Navigating the turbulent skies. The Chinese order halt is just the latest episode in the increasingly strained relationship between the United States and China. What began as a trade war has morphed into a broader strategic competition. The two countries are at odds over a range of issues, including trade, technology, human rights, and China's assertive actions in the South China Sea. The Biden administration has maintained a tough stance on China, continuing many of the Trump-era tariffs and taking steps to counter China's technological rise. The order halt suggests that China is willing to use its economic leverage to extract concessions from the United States. It also underscores the limits of economic engagement as a tool for promoting stability and cooperation. Section 6. Boeing's flight path, charting a new course. The Chinese order halt is a major setback for Boeing, but it is not insurmountable. The company has faced challenges in the past and has a track record of adapting to changing market conditions. In the near term, Boeing will need to focus on mitigating the economic impact of the order halt. This will involve working closely with its suppliers to manage production rates and minimize job losses. The company may also need to explore alternative markets for its aircraft, though finding a replacement for the sheer size of the Chinese market will be difficult. Looking ahead, Boeing will need to recalibrate its long-term strategy. This will involve reassessing its dependence on the Chinese market and diversifying its customer base. The situation also presents an opportunity for Boeing to strengthen its relationships with existing customers. Section 7. The aviation industry, a changing landscape. The Chinese order halt is more than just a setback for Boeing. It is a symptom of a broader shift underway in the global aviation industry. The industry is facing a period of significant uncertainty, driven by geopolitical tensions, technological disruption, and evolving passenger demands. The rise of China as an economic and technological power is reshaping the aviation landscape. China's growing domestic market is attracting investment from both established players like Boeing and Airbus, as well as new entrants like Comac. At the same time, the aviation industry is on the cusp of a technological revolution. Advances in electric propulsion, autonomous flight, and advanced materials are poised to transform the way aircraft are designed, built, and operated. The companies that succeed in this environment will be those that can adapt quickly to change, forge strong partnerships, and embrace innovation. The future of aviation will be shaped by those who can navigate the turbulent skies ahead.